Have you heard of the recent cooling measures? Are you wondering how it's going to affect the property market or yourself? Hi, my name is Jaden, and today I'll be talking about 3 important updates of the recent cooling measure. So first of all, which is the Additional Buyer Stamp Duty, ABSD, tightening of total debt servicing ratio, and HDB loan to value LTV, and diving deep down on what's going to happen next. So for the first update, the Additional Buyer Stamp Duty ABSD revision, prior to the revision, Singaporeans owning their first property do not need to pay for Additional Buyer Stamp Duty. However, for the second property, the ABSD is at 12% and subsequent property at 15%. However, since the latest cooling measures, the ABSD for Singaporeans owning a second property has increased to 17% and the subsequent property to 25%. So of course, if you are the first timer, congratulations, you are not directly impacted from this. However, for anyone else that intend to invest or purchase multiple property will probably think twice. For PRs, prior to the revision, the ABSD for owning their first property is at 5% and subsequent property at 15%. However, after this revision, PR that wishes to own a second property has increased the ABSD to 25% and third property to 30%. Lastly, for foreigners, before the revision, it was at 20% and it has increased to 30%. Now, 10% increase is a very huge increment. My view regarding this revision, it did not really impact so much for the Singaporeans because prior to the revision, Singaporeans are already not very excited to pay that 12% ABSD. Thus, they will either decouple to own 2 properties or they will rather just stick with 1 property. But there are of course buyers that paid ABSD for their subsequent property purchase, and those buyers' financial are usually stronger and for them they are okay to pay. So maybe with this new revision they will probably think twice if they were to enter the market again. However, they are the minorities. So the purpose of this revision on ABSD, I feel that is the authority trying to control the demand from the PRs and the foreigners so that they will think twice before making any move. But what surprised me the most was that these 2 years there aren't many foreigners entering into Singapore due to COVID-19. And foreigners that enter into property investment or purchase are the minority of the total sales volume. For their ABSD increasing to 30%, I do think it's a little bit too harsh, or at least at this point of time before the floodgates open. So if you see, from the recent new launch, there are actually a huge portion of buyers that are actually buying under a single name. I believe most of the single buyers are either first-timer or have already decoupled so that they are not subjected to ABSD. Other than that, we can also see that the percentage of buyer buying under trust is also at a quite high percentage, and foreigner buyers being the minority. So this is the reason why I feel that the ABSD did not really affect Singaporean as much. As long as your name is free from any property or if you have the full cash to buy under trust, you will not be subjected to ABSD. And if you are buying under trust, my next point about TDSR doesn't affect you as well. So will this affect the current new launch price? Personally, I doubt it, especially for OCR, out of core region, and RCR, rest of core region projects. The demand is extremely strong in these 2 regions, taking up about 80% of the total sales transaction volume. And developers already have majority of their units sold and they are not in pressure of selling due to the lack of supply in the market, therefore unlikely to reduce their price. However, if today we are talking about CCR, Core Central Region, which many of the foreigners are actually buying into, the price may see some adjustment because remember, the TDSR and the ABSD actually does impact the foreigners, so possibly affecting the demand as well. So, during the last cooling measure on 5th July 2018, which government similarly increasing the ABSD, prices didn't exactly go down. Yes, the market did quieten down a bit or slow down for 2 quarters, and the drop wasn't as much as we expected, and after that it actually bounced back higher. So based on history, this latest cooling measure might not have too much impact on developer pricing. Moving on to our second update on the cooling measure, the total debt servicing ratio, also known as the TDSR. This tightening of TDSR from the previous 60% to 55%, personally, I don't think this is a major cooling measure. Yes, your maximum loan amount will decrease because of that 5% drop, However, this is also to prevent people from over-leveraging and taking out loans that they cannot handle. it will not drastically disrupt the buying plans, to be honest. So, giving you an example, if today my buyer TDSR or maximum loan is at 1.6 million, meaning which their maximum purchase is about 2.1 million, it does not mean that we have to buy a 2.1 million property, right? Most importantly, we are getting a property that suits their needs and criteria, as long as it's within the range, not maximizing on their maximum loan. Personally, I think it's fine. And myself, being a real estate consultant, in most circumstances, I will actually not stretch my client's pocket to actually take up the maximum loan or the maximum purchase price for their house or investment hunting. I mean, unless they are comfortable with it lah, right? Because my client that I work along with me don't usually need to worry about over leveraging, because every time when I do the financial calculation, I will actually be very open with them and I will try not to stretch them to the max. So thus, I don't think this is a major disruption in terms of this cooling measure. So despite two cooling measures mentioned above, Ministry of National Development (MND) reiterate that our mortgage to income ratio is still well below historical average, however on an upward trend. So ultimately, the purpose of this cooling measure is to ensure that the property market in Singapore remain sustainable. Lastly, on to the last update of the cooling measure, which is the loan to value (LTV) for HDB. Previously, the max loan to value for property price for HDB loan is up to 90%. However, after the revision, it's actually reduced to 85%. Do take note, this is just for HDB loan. It does not affect bank loan LTV, so it is remaining at 75% for bank loan. So who will be affected? Mainly first-timer Singaporeans, HDB buyer probably, because for PRs, they are only eligible to take bank loan from the beginning. So when buying HDB, this new revision does not actually impact them. And majority of HDB buyers that I handle that takes up HDB loan rarely takes up to the full 90% of the LTV. Because after using their CPF, the loan that they will be taking up will probably be only 70 to 80% of the LTV. So this profile of buyer is either HDB downsizing or upgrading. So highly likely they actually have a property to sell. And once they sell off their property, they will actually have a lump sum in their CPF, which in turn could be used for their next property purchase. Therefore, usually they won't be taking up the full 90% LTV anyway. However, for first-timer that's actually looking for BTO or resale, because they are still young, the CPF may not have accumulated enough funds. Thus, this profile of buyer usually will take up that 90% loan to value when they apply for HLE or whatsoever, right? So therefore, with this revision, this may actually cause the affordability issue for some of the first-timer. I'm not saying all, but some of the first-timer may be affected. So for the first-timer, they might actually need a longer time to accumulate their wealth in the form of cash or CPF, which I think it may not be a bad thing, because after that extra years of wealth accumulation, they may be able to even afford an EC or a private condo. So all in all, is cooling measure a bad thing? From my point of view, it's actually not entirely bad. I mean, it's just gonna make the market more sustainable and not supposed to halt or stop the market, right? So I do not believe that this cooling measure will actually causes a price to drop in the new launch market, because as I mentioned previously, the developer actually don't have a lot of supply left to sell, and they are in no pressure in selling the remaining units. And ultimately, developer is also a business entity. Therefore, they will not sell their unit below break-even price. So as for Singaporeans looking into CCR market, I think that's also a good news, because you actually have lesser competitor or competition from foreigners for the unit, especially when you're balloting for new launch. And that is because due to the lack of demand from foreigners because of the ABSD. So the developer may actually price a future new launch in CCR more attractively, but who knows, right? If you are a resale buyer today, then I think it's an extremely good news, as you can actually use this cooling measure into your advantage when it comes to price negotiation with the seller. Because in these 2 years, I personally have witnessed many sellers shifting their goalposts, knowing that the market is hot. So when they actually receive an offer that matches the market price, they actually wanted more. So now for buyers, you can actually negotiate with this new cooling measure, stating that, oh, you know, my TDSR only allows me with my max purchase price to be at this particular amount. Or alternatively, because of the HDB loan to value, this is the max offer we can go. So the seller may not be so aggressive with the asking price anymore. So lastly, do I still wait hoping for the price to drop, or should I buy now in today's market? So let me share with you my experience, because previously I've met a client in 2018 when the cooling measure hits. He actually mentioned that he will wait for the price to drop before he decides to make a move. So I mean, every year I just send him a yearly report of the property market. Then this year he actually replied me. So after 3 years he finally replied me, and these are his exact words. Wow, the price haven't dropped, still going upwards. Wow, I should have bought that time, because if I bought that time, right, it would have at least 200 to 300 per square foot growth now already. But now my HDB price also not as good as compared to 2018. So my cash proceed not as much. I should have. This line is actually very familiar, because when I speak to clients, these are what some of the clients actually told me. You know, I should have bought this 4 years ago, I should have bought this 2 years ago, etc, etc. And every time when I look at the price chart, it's always on the upwards trend. So even if today, let's say today we are buying at the peak, you know, the next peak is always going to be higher than the previous peak. So even if market is not doing good today, even the lows are still higher than the previous low. So it's not about buying at the peak or buying at the low. It's about entering and exiting the market at the right time with the correct property and unique choices. Because there are buyers that bought projects that launched during cooling measures period, and there are buyers who bought the similar project but waited 1 or 2 years later, and they actually paid 200 to 300 per square foot more than those who bought during the launch period. So can you imagine, for those buyers that bought on the launch day, how much of a safety net they are sitting on, and what would the paper gain be? So if today you are looking at property market, this is a good period to secure your choice unit at a reasonable price before the market accepts the new ABSD rate and trigger another bull run. Most importantly, you can also catch the resale market peak in 2025. Why 2025? First of all, remember, seller stamp duty holding period is 3 years. So if you are holding on to the property for 3 years, you will not be subjected to seller stamp duty when you sell. If not, it's just going to be based on whichever year you sell, you will be paying the seller stamp duty based on the percentage. So at 2025, it is expected to be the high resale peak due to the lesser completed new homes. So if we wait for a while more before we purchase, we will probably risk stuck with our SSD holding period when the resale market is at the strongest in 2025, and we will be missing out on the opportunity. Right? So if you wish to find out more about the cooling measure or wish to understand the property market, do contact me via the description link in the comment section down below. And if you like my video, do like, share, subscribe and press on the notification bell so that you will get updated when I upload a new video. So once again, my name is Jaden. See you.